pertaining to commission, but now it gets even better now. Real estate, you could buy a multifamily property, duplex, triplex, quadplex with 5% down. What's going on, Noah? Welcome back to the channel. I'm your host, Noel. In today's video, I got my guest back again, Jared Campbell. Welcome back to the channel. How's everything?
I'm doing fantastic. I truly appreciate that. Anytime I get the opportunity to speak to you and educate, those potential buyers out there and other real estate agents is truly, beneficial. And I recently switched over to Motto Mortgage. I am now the senior loan officer here. I switched over to the broker side, which is unbelievable. The benefits outweigh where I was at recently as a direct lender. Some of those benefits include, getting your condo questionnaire paid for up front, no money out of pocket there, $1,000 lender credit to help you, utilize towards, your closing costs or buy down the interest rate. And then the most importantly, as a broker, I get to take those individual, applications and shop it to numerous lenders to get them the best interest rate as well as the best program available and closing cost. So those are things that truly excite me about being a broker, is that flexibility. And then I still have access, to the underwriters, my processors, because we actually interview every single lender and processor that we work with to make sure they work on the same level that we do with communication and speed. Because, in this very competitive market, it's extremely important to be competitive. So, and to stay on top of stuff. So, I'm happy to be here and, happy to be part of Motto and, looking forward to this awesome, interview.
That's amazing. That's amazing. Yeah, congrats on the move once again. Congrats on being a dad as well. I had to put that out there. Welcome to the fatherhood side. I know it's amazing.
Yes.
So a lot has been going on in real estate, so I know you're on top of it. For the viewers, I'll top on some real quick. $1.8 billion within the past 2 weeks was just given away due to this lawsuit. And now, and the lawsuit pretty much was pertaining to commission, but now it gets even better now. Real estate, you could buy a multifamily property, duplex, triplex, quadplex with 5% down, and that is starting November 18 of 2023, depending when you guys see this video. Now, is that something that is going to be for life, or is that just a temporary thing Fannie Mae is doing?
I mean, they're never going to come out and specifically say if it's temporary or long term. Majority of these guidelines, especially when they're going to be lowering the down payment requirements, are specific reasons. And I truly believe this is going to be long term, because prior to this, I mean, when you were to buy a duplex, you had to put 15% down. And then if you did a triplex or a quadruplex, you actually had to put 25% down. So to have 5% across the board is huge, because not everybody has 25% down, especially in our market when those can run anywhere from, 700,000 over to $1 million. Not everybody has $250,000, $300,000 to be utilized for the down payment, especially if you're trying to get into that whole specific thing, house hacking, that everyone calls it, when you're going to be purchasing a multifamily home as a primary residence. Your other choice prior to this was FHA, which was 3.5% down, but they also had some restrictions on the rent and how you calculated that. So this is a far better product for just slightly a higher, down payment.
And that was going to be my next question. So I know, similar to what we did to our last deal with Dennis, we had to do that letter. I know he had the property in West Palm Beach, and it had to make sense with the loan. Now, you just said with 3.5%, it has to make up with the rent in order for that to qualify. With this new 5% down now, that doesn't qualify at all. It's just you can buy it, live in there, rent it out for whatever you want. Is that correct?
So they still are going to be required to do a rent schedule. I mean, they're going to go out there, and during the appraisal, they're going to do a understanding of what the rent is for those particular units, and then they can utilize that to offset the mortgage payment. unless there's already people living there, then you would have to utilize that particular lease of what they're, renting at that time. So, I mean, there always are going to be some types of, restrictions that you have to be aware of. But prior, you have to max out at 75%. And it didn't really allow you the same flexibility as you have now with Fannie, with the Fannie guidelines. They're a little bit easier. And then obviously the appraisal themselves,
Mhm.
FHA does have a little stricter appraisal,
Right.
and then with Fannie, it's a little bit more open where you know, the structure of it can be a little, less perfect than what you're going to have with FHA. So it gives you a little, like I said before, that flexibility that FHA did not.
No, yeah, agree. That was one of the things because I get that asked a lot. Like Noel, trying to buy a duplex, like you said, to house hack. I preached that many times. That's like one of the safest ways. But one, you have to find a property that makes sense because I've found properties within the 400 or 500. But let's be real, in South Florida, you ain't really making money on those properties unless you're fixing it up and it's in a prime location. You will make money and it will make sense, but the average single family home right now is looking at $650,000 right now. We're looking at so now for a multifamily, even a duplex, I would say a safe place is like 700 starting off now. And with that 5% down, that definitely is a major change in the industry for a lot of people to house hack now. Now, besides having as far as the rent makes sense in order to do it. Let's say if I wanted to buy one but not rent out the other property, let's just say put a family member there for fun, but I'm paying the mortgage by myself. Do that still qualify as done with the whole rent calculating involved, or no? It's completely different from that.
Oh, I mean, it's not going to require like a signed lease or anything of that nature. And that's what I mentioned before. It's going to be the rent schedule on the appraisal
Mhm.
on what that suggested rent should be for that. And then
Oh,
they're going to utilize that to offset your overall mortgage payment for your qualifications.
okay, bro.
So, if you were, I mean, as we all know, I mean, interest rates unfortunately are high. And even if you put 5% down, you're still going to have to still make a decent amount of money in order to qualify for that particular property. Even if you're getting, two or 2,000, 2,500 or something of that nature to offset it, because a mortgage payment on a $700,000 property at 5% down could roughly be over $6,000. So, it's with the interest rates the way they are now. So you still hypothetically are going to have to qualify for a 3,500, $3,700 mortgage payment. And that's going to be roughly about $100,000 a year. So, but, at the end of the day, if you're, comfortable living in, a portion of the multifamily property, you only live there for a year, then you can move out, keep that as a primary resident interest rate. I mean, granted, the homestead exemption is only going to take place on where you're physically living. But
Mhm.
if you decide just to live there for a year, rent out the unit that you're living in, and then go buy something, then you have two to four units rented, continuously and generating revenue. And hopefully that's superseding your overall mortgage payment. So,
Right.
that's the most important thing, is making sure that you know what you're doing. I mean, don't just jump into this because you feel like it's a great investment opportunity. At the end of
Mhm.
the day, you are a landlord. You are taking care of every single repair, every single issue out of those two to three additional units outside of the one you're currently living in. So AC, plumbing, electric, roofing,
Yep. All that
damages that they
area.
do, et cetera,
Mhm.
is all your requirement. So, having a real estate agent like yourself that's educated in, finding them the correct property, and a loan officer like myself to identify what that mortgage payment is going to be and to try to identify those expenses is your number one goal first, is to make sure you're working with educated individuals. So that way you don't just jump in and think, hey, I'm now going to be a real estate investor and jump into a money pit. Because,
Yep.
at the end of the day, real estate is a phenomenal way to gain wealth and a great way to build assets and build your portfolio. But at
Mhm.
the same time, if you are uneducated, it could be detrimental to your situation and cause you to lose a lot of money. So, being up front with your, potential buyers is extremely important, because if you've never been a landlord before, it's an eye-opening situation for sure.
Yep, definitely. I always tell everyone before investing in anything, real estate, stock, deeds, whatever it is, take the time to learn, spend like 3 to 6 months, find mentors, networking events, etc. Learn about it because everybody thinks it's easy. You buy a property, you move in one side, you rent out the other side, and then boom, you're happy. You may fix some stuff, but people don't understand it's the numbers, and that's what really matters. The numbers have to make sense. Unless you don't care for the numbers and you're like, hey, they're just helping me pay half the mortgage, then that's a different story. Teach his own. Now, for clarification, because some people still get this idea wrong. Duplex, triplex, quadplex, that is considered residential. Anything 5 units and more, that is considered commercial. Correct.
100%.
Now, the 5% rule only applies for the duplex, triplex, and quadplex, not in more than 5, right?
That is correct.
Anything 5, you're looking at close to 20 to maybe 30% down payment as in pretty much need moving forward. Am I right?
Correct. Yeah, depending on what it's going to be a private lender at
Mhm.
that point. So it's going to be based off of what their guidelines and requirements are.
Right.
I personally never done one of those because it's not, I specifically deal with residential, non-qualified mortgages, FHA, VA, etc. So
Yeah.
they all have the same exact guidelines as 4 units as well.
All right, perfect. So that's rolling out to November 18th, which is next 5 days coming up. We don't know how long this is going to be. It may be something for a couple of years, maybe a year or two. Hopefully, it stays around forever. This is definitely the best time, especially with the market coming for anyone that is looking to buy within the next upcoming year. Because my personal thoughts are how I see the market moving within the year. I've been telling by based on election. I'm not a political guy or anything like that, but I know the election is going to play a major factor in everything. That's that final chess piece we're waiting to move. Once when that happens, that's when we're going to see everything crumble. Whether you like the person or not, whoever goes in there, that's going to change the game for sure. My best advice to everybody is just plant your seeds, build your credit, save money, and just get ready. Because when the interest rates drop, because they're already dropping now. We were at like 8.5. Now we're close to like 7.5. I'm going to see it get dropped back. My prediction is next year close to like 6, but then we're staying there for a while. What's your prediction for next year?
I mean, the Feds continuously say they're going to keep the interest rates higher. Yes, the rates did go down to 7.5 last week, but 2 weeks ago. But last week we didn't have the best week in the market, and this week they're back to about that 8% range. So they did increase slightly. So
Yeah.
these are my tips if you're out there buying and you still want to buy. Properties are sitting on the market for a little bit longer. Sellers are itching to move, they most likely are listing it because they have to move.
Right.
So if they have to move, they need to sell it. So what are they willing to do for you at the end of the day? So if you're able to get a small seller credit of 2% of the loan amount or the sales price, which, say 500,000, if you're able to get a $10,000 seller credit, you can utilize that to permanently buy your interest rate down or do a temporary buy down. Obviously, the two differences are temporary, it's only for a couple of years, well, the permanent's going to last for the foreseeable future for the 30-year term. So the biggest difference is we can qualify you at a higher buying power because we're qualifying you at a lower interest rate. Where the temporary buy down, we have to qualify you for the highest interest rate, which is at the end of the 2 or 3 years. So if you're able to get a seller credit and utilize that to permanently or temporarily buy down the interest rate, that will help you save in the short term or long term. And when that time comes to refinance, then you go ahead and move forward and refinance.
And what's your take on this before we wrap this up? Buy now, refi later. I know a lot of people are iffy about that. I feel like to me personally, this is how I see it. It sounds so cliche, but I tell people it has been shown like the market is steady when rates are within that 5.5 to 6.5%. That's been proven even before I became a real estate agent.
Correct.
I feel like you buy now, yes, you might take a loss up front. So, for example, a 2-2 condo, let's say as an example, you might be paying close to like 3,000 for a 2-2 condo for 1,000 square foot, for example. But let's say you wait 10, 15 years, the rate doesn't drop down to 6, let's just say 10 years from now. But as the time progresses in that 10 years, we went from 8 to 15. At least you locked it in at 8. Would you advise anyone to do that now, still buy and then wait, or wait for the rate to drop and then just do it at that moment?
I mean, if you can afford, my number one thing is affordability. Can
Mm-hmm.
you afford the property? Yes
Right.
or no? Because what's going to happen? I mean, appreciation on that condo is going to continuously to go up. Okay. And then secondly, um, your rate is locked in, and that's why I said if you could do that permanent buy down, like I say, you can go from an 8 to a 7%. Now you're permanently locked in at 7. But if you're looking just to live there for 3 or 4 years, 5 years and sell it,
Mm-hmm.
then just buy it. Who cares what the interest rates are? Because you're just going to build that appreciation. You're going to build that equity on the property, and you're never going to refinance anyways, because it doesn't make sense financially to refinance something unless you're going to be there for at least 5 to 10 years or more after you refinance, because you're literally pissing money away at that point, because it costs money to refinance, and
Yep.
it's going to take a while for you to recoup that money. And we always do that calculation for our buyers when they're ready to refinance. Obviously, we did this substantially, when the rates were 3%, people were at 6, and it would come down, and your monthly payment was $300-400 difference. And then whatever the cost was to refinance, we take that 400, divide it into that, and we say, okay, after 2 or 3 years, you'll start to see that particular savings.
Mm-hmm.
But, if you use money to buy the interest rate down and then you refinance in 3 years and then you sell the property in 5, you literally blew $4,000 or $5,000 that you're never going to get back. So those are conversations that I love to have with people, so I can truly educate them on the dollar amount that they're going to either save or spend, in order to justify their actions. Because if you're not going to stay in long term, refinancing it doesn't matter at that point. Just buy now, because you're going to build that equity, because you're only going to sell it in 5 years from now.
And that's
So
the same thing I tell everybody as well. Like, studies have shown the average person finds their dream home within the seventh purchase. Seven purchase of a property. Some has been 5, but the average number throughout the US has been 7. So I tell people, it's like, always start small. Don't try to attack that dream home. Like, I want a 10 bedroom, 5 bathroom pool home. I'm like, that sounds good to have goals like that. Like, we all have goals in life, but start small. Learn the financial aspect. Learn what it's like to own a property, whether it's a condo, townhouse, or villa. Always start small, then work your way. But then I tell everyone, make sure you're able to afford it, because the numbers have to make sense. You don't want to be one of those people that purchase a home and then you're at work all day. Like, it sucks. You have a beautiful home, you're proud of it, but then you're working 16 hours a day, 5 maybe 6 days a week just to maintain your pocket.
correct.
And
Light quality of life is just as important.
mm-hmm.
And if you can't afford it, and just save again, and wait until you're ready to buy, because when rates go down, we're still a lack of inventory at the end of the day. We're still a shortage of inventory. So, and there's still tons of people that want to buy. So when rates do come down, it's going to reverse back to that competitive market that we dealt with
Mm-hmm.
in 2020, 2021, and 2022, where you had lines out the door at open houses and offers, 5, 6, 10 offers on each of these properties, because now it's going to bring in a whole new group of individuals, because now the income requirements are going to come down to purchase these homes.
Yep.
So, it's just if you can afford it, that's all I can say. If you're
I
comfortable,
agree.
afford it. You're not going to pay someone else's, mortgage payment by paying rent or anything of that nature. You're only going to build your own assets and build equity in something that's yours.
I agree with that. And before we wrap this up, I'm gonna make an announcement then, since I know you guys are giving, like you said, a credit towards closing, which is up to 1,000 or maybe more, depending on the financial aspect and everything. What I want to do starting today, November 13th, all the way to January 31st. I used to do this when I started. I'm gonna bring it back. So whatever amount of money you guys ditch out of pocket, so it's like 1,000, 2,000. I'm going to match that from my commission and put it towards the buyer. So let's say if you guys help out 1,500, I'm going to get $1,500 for my commission, but my stipulations are anyone that's purchasing over a home of 500K and up. Because if I do it anything below that, it really makes no sense, and I'm not gonna walk away with anything, especially what's going on with this commission. I'm gonna do that as well. So starting today, November 13th, I'm matching whatever we do a deal together. So if you guys ditch out 1,500 to help out the buyer, whatever the case may be, I'm gonna take $1,500 out for my commission, let's just say in this scenario, and that money could be used towards the same thing. It can help out with the credit if I'm able to do that, or a down payment, whatever that cost is. That promo is going to be running from November 13th all the way to January 31st. And yeah, but you have to use me and Jared. That's the only way you could get that money. Without that,
That's right.
other than that, Jared, before we wrap this up, let everybody know how they can follow you, either email, phone number, social media. Take it away.
Absolutely. So Loans by Campbell is my Instagram. It's Jared Campbell. My phone number is 954-649-0020. And my email is jared.campbell@mottomortgage.com. Reach out to me anytime you have any questions whatsoever. I'd love to speak to you and see what we can do to qualify you to buy a property.
Perfect. Jared, once again, thank you for your time. Pleasure having you on the channel, and you have a wonderful day.
Thank you.